What's going on, guys? My name's Charles, and this is the Traders Corner. Now, we started TTC as some friends from college, my friend myself, my friend Daniel, my friend Isaiah. Essentially, just because we've been, failing forward, struggling and kind of going through a lot to learn the skill of trading, and just general stuff about the markets and just kind of understand it better and understand it better for ourselves and our families and all that kind of stuff. And we kind of want to give that back to the community. We don't want you to spend time having to struggle, or as much time having to struggle as we did, if we can help it. So that's what we're doing today. And so today, in that vein, what we're going to be looking at is we're actually be looking at kind of how I go about setting a daily bias using a very simple tool. It's available to anybody that has TradingView. And really, even if you don't have TradingView, most charting tools, softwares, all that kind of stuff has it, because it's a very basic tool, very basic thing that's used in trading a lot, and that is the fib retracement tool. So what do I do with that to set my daily bias or set my weekly bias? Well, it's a very simple understanding. It's really understanding the idea of, I don't want to trade unless I am being a contrarian, right? And I don't mean being a contrarian in the long term, because that to me is not being a trader. That's kind of being a contrarian investor, which is a different discussion for a different day. I'm not saying it's right or wrong. I'm just saying that that's not really how I think about it when it comes to trading. I think in terms of understand the overall trend, and then understand when you're being a contrarian on the lower time frames, right? So, for example, what are we looking at here? We're looking at Dow Jones. What's the overall trend? Just looking at this daily chart, just as it is, I haven't touched a thing. It's down, right? I think a blind man can see that, right? So, what would be me being a contrarian on the lower time frames? Well, let's say I go back to, let's use this replay tool here, right? And again, what's the overall trend? Still down. So let's being a contrarian on the lower time frames. Let's go back to the 15 minute, right? What does it look like on the 15 minute? Looks like a pretty strong, clear uptrend. Well, to me, that's a good place to, get along with the trend on the daily, be a contrarian with the trend on the lower time frame, right? And understanding that's kind of where the fib tool is really helpful to me, because it essentially establishes a very quick and easy place for me to establish. It simply establishes a very quick and easy place for me to know here is where you're likely to start being a contrarian on lower time frames, right? So what do I mean by that? Well, if I use the fib tool and I measure it, and I'm not going to talk about why I use certain swings and don't use certain swings and all this kind of stuff, because that's a different discussion for a different day. But essentially, if I use the fib tool and I measure it from here to here, right? Where's 50%? Right? 50% is this 0.5. So 50%, 62%, 70.5%, 79%, and then 100%. And again, this is called the fib retracement tool. So it measures the percent of the retracement. So 50% retracement tells me that likely on a lower time frame, it looks like a very sustained counter trend than it does on this higher time frame that I'm currently analyzing or using the fib tool on, right? So I'm using the fib tool on the daily. I'm dragging it from swing high up here, the body of the swing high, to the body of the swing low, right? Then I want to see us pull up to 50%. So understanding that's what we want to see when it comes to the fib tool. Well, what are we going to see when we pull up to 50%? Well, let's go back here, and yes, we're going to cherry pick this, right? So let's see. Which one is higher? This one is higher, correct? Yes, it is. Originally have it dragged here, right? You can see here we pulled up, got close to 50%, didn't get there, crashed down. So then we would adjust it here to this new swing low. So swing high to swing low, right? we actually got all the way up to 79%. Right? So I'm not saying that it has to turn around at 50%, but once it hits 50%, that's when I start to get interested, right? And on the flip side, as well as it offers me a place to start to get interested, it also offers me a place to let the market go and admit that I was wrong, all right? Because the easiest thing for me to do as well is just to go to this swing high that I marked on, right? And put a line up here, put a 50%, put a line at the 50% area, right? So I know if we're in between these lines, we're good to go. If we're above this line, I was wrong, right? If we're below this line, shouldn't be trading, right? So in between the lines, good to trade. Below the line, not good to trade. Above the line, not good to trade. At least not good to trade until we see a retracement on the flip side, right? Because that's when I would start to say, okay, well, this to me might denote that we have actually kind of changed trend, right? And I say might change trend because it's very easy for the market to kind of just need to refresh itself, like really need to refresh itself. And sometimes it'll do that by inducing a lot of orders to the flip side, right? And what's a good way to induce a bunch of orders to the flip side? Well, bro, if you take out two daily highs and you actually want to go down, like the market actually wants to go down, well, a great way to actually go down is to take out a daily high because what's going to start happening? Well, a lot of people are going to start buying, right? And if a lot of people start buying, right, then it becomes a lot easier for the market to start selling. Well, I hope you guys enjoyed this video, man. Hope it provides some value to you guys. And join us again next time.